Quantum computing's first U.S. commercial sale, cybersecurity breakthrough. Quantum computing just made history, but is the hype justified? Let's cut to the chase. Quantum Computing Incorporated has just landed its very first commercial sale in the United States, and the financial world is buzzing. This isn't just another tech headline. This is a pivotal moment that could redefine cybersecurity as we know it. But here's where it gets controversial. Is this breakthrough truly the dawn of a new era, or are investors getting ahead of themselves? Here's what you need to know. Quantum Computing Incorporated, NASDAQ, QUBT, has secured a $332,000 order, marking its inaugural U.S. commercial sale. This news alone sent the company's stock soaring by 7.61% during Thursday's trading session, with a 2% jump even before the market officially opened. Clearly, investor excitement is running high. The buyer? One of the top 5 banks in the United States. By investing in Quantum's advanced quantum communication system, this financial giant is signaling a major shift in how the industry approaches cybersecurity. Imagine a world where sensitive financial data is protected by technology so advanced, it's nearly impossible to hack. That's the promise on the table. As of 12:02 and 22 seconds Eastern Standard Time on July 17, 2025, QUBT shares were trading at $19.80, up from an opening price of $18. Quantum computing, QUBT, skyrockets 155%, inside the surge and future prospects. Breaking headline, Quantum Computing Incorporated, ticker QUBT, just rocketed so high that many longtime market watchers had to refresh their screens to believe it, an eye-watering 155% leap in only 3 months. But here's where it gets controversial. The rally did not happen in a vacuum. Instead, several dominoes fell in rapid succession, each one amplifying the next. 1. A fast track into the spotlight. The moment QUBT was added to several widely followed Russell indexes, thousands of index tracking funds were suddenly required to buy shares. For anyone new to the jargon, an index is simply a collection of stocks designed to mirror a part of the market. When you're in, big pools of passive money have no choice but to own you. That mechanical demand often sparks price momentum all by itself. 2. Fresh cash, stronger signals. Right on the heels of the index news, the company closed a private placement worth $20 million. A private placement basically means the firm. Is quantum computing stock under $20 a smart buy? Deep dive analysis. Is there really a quantum computing stock under $20 worth buying? Buckle up, this roller coaster investment might surprise you. Quantum computing represents a revolutionary frontier within artificial intelligence, capturing investor imaginations despite its early stage. McKinsey & Company predicts quantum tech could generate trillions in economic value, positioning it as a potential long-term AI game-changer. But here's where it gets controversial. Quantum Computing Incorporated, QUBT, trading below $20, has skyrocketed 2,480% in a year while generating just $385,000 in revenue. How does that make sense? Let's unpack this puzzle. The hype seems driven by macro narratives rather than business fundamentals. NVIDIA CEO Jensen Huang's bullish quantum comments resonate powerfully given NVIDIA's AI influence. Additionally, anticipation of Federal Reserve rate cuts fuels speculative growth stocks like QUBT. When you examine the valuation, though, things get eye-popping. A price-to-sales ratio over 5,200. To put that in perspective, even during the dot-com bubble, companies like Amazon peaked at 43 times sales. More recently, COVID darling Zoom topped out around 124 times sales, still dwarfed by QUBT's multiple. This discrepancy raises serious questions about sustainability. Now for the twist. Quantum Computing recently issued 14 million new shares at $14.25 to raise cash. This move suggests management recognizes the valuation's fragility and is capitalizing on inflated prices. While $18 per share might seem affordable, the underlying fundamentals, minimal revenue, no profits, and bubble-level multiples, paint a risky picture. And this is the part most investors overlook. Could this share issuance signal that management itself doubts the stock's current worth? Considering all angles, quantum computing appears as a speculative gamble rather than a sound investment. Its trajectory depends entirely on future quantum breakthroughs rather than present performance. What's your take? Is chasing this quantum dream worth the risk, or are we witnessing another bubble destined to burst? Share your perspective below.